Ladies and gentlemen, welcome to the NU Bank and Dlocal earnings live stream. Neil, Couch Investor, will be joining me here in a moment. I think he's just getting something really quick. And then we will be going through a bunch of different company earnings. So a couple that we have, NU Bank, Dlocal, those are obviously going to be the big focuses today for me and Couch Investor. We have Applied Materials, Figma, Stoneco, Rumble, a bunch of different companies in the list, Nuclear Energy. That being said, we also have NVIDIA in the stock market today, headed to a close right now, over $235 a share. So this will be extremely exciting to see if it can close out at new highs, but did eventually hit 236.54, which is an all-time high, bringing the company up to $5.7 trillion of market cap. This is quite exciting. Let's take a look at some of the other AI companies today. Cerebras IPO'd today. It's now holding at $316 per share, up 70%, and would actually be up a lot more than that if they initially IPO'd where they wanted to at $115 a share. So there's been a lot of interest in this name, a big competitor for chips against AMD and NVIDIA once again. Nebius hit 224 today. Well, actually 233, but back down to 224 right now. Iren is up. Taiwan Semi is up. Pretty much every single company. There's a couple of the really big names and the memory names down today. Amazon down, Google down ever so slightly, but Taiwan Semi, NVIDIA, Cerebras, all of these are up a ton. Poet is up 38.7%. Boost Run up 24%. Klarna is up 19%. A lot of really, really high flyers. But let's take a look at NU Bank, Dlocal, and some of the other companies that are actually reporting earnings right now or after the bell. NU Bank is under $13 a share, up 1.4%. And DLO, this one is up 4.2%, $12.67. Pretty crazy, considering the pace of growth in this company. Essentially growing by over 60+% net income, also growing at similar rates as they've been able to maintain their margins. The trailing PE on this company is 19.5 times. So not a lot of love from this market, but we officially have the great and powerful Neil.
Hello.
How you doing?
Doing very well. How about you?
Doing good, man. Which company? We're going to be looking at both NU Bank, Dlocal. I'm sure we'll take a quick glance at things like Figma and Applied Materials and stuff like this. But which name out of those two are you more excited about tonight?
Well, I own more Dlocal than NU, so I guess Dlocal. But I know you are heavier in NU. But I own both, so excited for both of these names. Both Latin American names have gotten hit more recently, so I'm not expecting any favors from the market, but I do think both will have still quite good quarters.
And here we are sitting with Dlocal under 13. It's $12.66. It seems ridiculously cheap for this name.
Every time I look at this name, it's like it's either 12 or 13. It's like, and if it's 16, then it's just that one day after earnings pump, and then we go back down the day after.
Even though it's growing, by freaking 60%, it stays at the same price. The company just gets cheaper.
Yeah.
Who knows? Let me go ahead. I want to see what time the earnings are actually at for Dlocal, because if it's at 4:30, I'd love to listen to both. But yeah.
Let's see. NU is straight after.
Is it? Are they side by side?
So Dlocal is 5 p.m. Eastern.
Mm-hmm.
And NU is
probably also 5.
Yeah, probably.
One second, I'm just going to blow my nose.
No, NU is at 6. NU is at 6.
Well, that is horrible news. I don't want to be that live for that long. Might have to change the title. This might be a Dlocal stream. I don't know. What do you want to do?
I mean, it's not like we have a choice, right? I mean, we anyways have to go and we'll read both of them, and then we'll listen to Dlocal because Dlocal is at 5. And then I guess if we're still not asleep, then I guess we can listen to NU right after.
Yeah. Do you want to listen to both side by side? I got to make sure I switch the. Well, we're definitely going to listen to Dlocal. That's for sure. Because if it's first up, then we're going to listen to that one. But yeah. Let me put the stocks back on the board. I didn't know it was at 6. I thought that one was at 5.
It says you're 6 p.m. Eastern and 7 Brazil. So, yeah, strange.
Yeah. Either way, I'm pretty sure the numbers will still come out at 4. Actually, 415 for NU, 405 for Dlocal. So we'll have the Dlocal numbers for a little bit. That's good. And then we also have Figma tonight at 405. That seems like a company that you might own.
No. The moment it went public, I was like, this thing doesn't make any sense, because I've been following Adobe a lot, and then like if you do the valuation comparison, yes, Figma is growing much faster, but even then, and yeah, okay, since it went public, this thing is also down in the gutter like every other software name.
Yeah,
but yeah, it's down 82%.
It's the valuations changed on this name a lot. I think it IPO'd at maybe it was the Adobe acquisition. No, Adobe acquisition was 20 billion.
And now it's 10, and now it's 10 billion.
Right, but there was a moment, I think, where it got to 50 billion or something.
Yeah, so a year ago, it was worth $100 per share, I think. $115 per share, actually. It peaked, okay. Yeah. Yeah, so I mean,
although it's having a good day, holy.
I mean, it's a good day in the market overall. Overall, I had to roll up my Nebius covered calls because that thing just keeps on. I thought my 220 for tomorrow was safe, but was not going to take the risk with this thing now at 223. But it was at 230 earlier today, so I was like, you know what?
What do you have now?
270, but for 3 weeks from now, so early June.
Oh my gosh, you're fine.
Yeah, I mean, the premium was very, very, very lucrative. So,
do you want to hear the situation I've got myself into?
Yesterday, I think you said you had the 200 still?
200s for July. Yeah, that's what I had yesterday. I have something new today. I have 240s for November.
Okay, 240, but you got like, I don't know. What's 240 for November? You got paid a lot.
Well, my contracts were underwater because they were 200. So
yeah,
the cost to close them was pretty high, but I got roughly about a $4 credit. So yeah,
240 November. I mean, you are hoping for a horrible second half of the year for the market.
Dude, probably. I'm not hoping for anything. I think in that period between July and November, I'm going to find another stock that I can immediately guarantee I'm going to get 20% positive gains from. So the role for me was I got $4 in credit and I got to bump up my price. But I don't even think in the realm of possibility I'm trying to get these covered calls closed. I'm just squeezing out additional gains. Like, but I think I will get buried in this name unless, the stock comes crashing down and then I can close them for a small price. Something like that.
I'm looking at the 240, even 250 or 260 for November. If anyone's interested in that. Yeah. One contract is $6,200 in premium. Not bad.
It's crazy. I looked at like going out into next year, rolling up to I think it was 310 or something today. and I was still making a fortune. But I don't have to do that just yet, and I'm happy that I have some flexibility. But most likely, I'm not going to see the full benefits of this trade because I've gotten myself a little buried. But that's why you don't do it on all your shares.
That is true, because then you keep the upside for some of it, and you just capture the rest.
Yeah, and I allow some of it to, if it wasn't this explosive, I would have found additional premium. It's you try to balance out that risk reward, and this time there was much more reward than I thought there was risk, and so I'm missing out on a little bit of that by doing these covered calls. New calls and puts are mega juiced. I didn't know that.
Crazy day. Did we honestly, I didn't check anything today other than this Nebius thing, but did we have some news from the China trip yet, or nothing got revealed so far?
Well, there was H100s and H200s are selling in China now. We saw
officially?
That.
Or we have to wait for China to say yes?
No, you can go on JD.com and you can buy chips right now.
Okay.
So yeah, they have NVIDIA products shipping or available for purchase on things. People have found the confirmation for that already. I can pull up this source as well. And then,
but even last year or a long time ago, there were some people that were sharing links that you can buy. I think on Alibaba, you could have found like SMCI racks with NVIDIA's products in it for like, I don't know how much. It was these types of websites.
Yeah. Well, maybe it's maybe that's the case. I don't know, but this is what there was another one. I don't remember where, but the H200s they had also found as well. And that's why the stock is up, 4+% or whatever.
Yeah, I see. 235. Huh. Nice. Nice.
And so, yeah, the stock is taking pretty kindly to that news. And what's it called? Boeing also saw some news. I think they were selling 200 jets to China. But the market actually wanted to see, I think, somewhere in the magnitude of 400 to 500. So the stock's actually down on that news, even though they did get a deal. It's not as large as they thought.
Okay.
So those are the ones that were definitely really big deals that I saw.
Okay. I guess so far so good.
How much are you guys paying to roll those calls? Nothing. I get a credit every time. So the amount of money that I'm making on the new calls are paying for the
offsetting the loss from the
Yeah. So I got paid to change my strike from 200 to 240.
Same.
So I'm capturing the difference there, which is a 20% bump, and making $4 a share. That's why I'm doing it, because I think in this market it's really easy to say, hey, just let them expire and then buy into the next Cerebras IPO and make 100% rather than only 20 over a couple of months. But I think in the grand scheme of things, 20% in a few months is a significant win. And it probably won't be the last time that I end up rolling it and making additional credit. And then that credit is made to me immediately. I'm taking that premium and putting it into CoreWeave right now. So, I think it's good.
Yes, and that's at the assumption that we continue to go up, because if we don't go up, we just got cash right now that we can use. And our position continues to exist, which is a good thing.
Yeah. So, guys, it looks like Nubank is going to be at 6. That might be a little late for me. Oh, by the way, the market's just closed. So let's go ahead and take a look out for these companies. So we have Nubank, we have Dlocal, AMAT. What else?
Figma. Let me tell you.
Stone Co. You ever hold that name?
No. I decided to go first with NU, but then I put everything in Mercado. But yeah, never went with Stone Co. I don't know. A good business, but like NU more, Dlocal as well.
Yeah. I wasn't a fan of Dlocal before, but got it recently ever since they changed CEOs.
Yeah. No, if Pedro wasn't CEO, I probably wouldn't be in the name, and it probably would have been acquired, sold by now.
I think that's fair. Yeah. Okay, we have Nubank and Dlocal getting ready to show off earnings after hours, both in the $12 and whatever range. Obviously, very, very different market caps, 62 billion versus 3.7 billion. Applied Materials starting out earnings with a nice bang up 5%. And I'll get you guys some numbers here in a second. Yep, double beat. EPS was expected to be 268, but they actually put up 286, a beat by 7%. EPS is up 20% year over year. And revenue was expected at 7.7 billion. They put up 7.91 billion, a beat by 3%. Revenue is up 11% year over year. So good numbers just on the top and bottom line from Applied Materials, but that's all the numbers I have so far.
SoFi.
Yeah. Trump
SoFi
bought
was up today.
SoFi. Did you see that Trump bought SoFi?
What? What do you mean he bought SoFi?
Trump's been a trader, like trading over the last little bit. He's made over like 3,000 transactions over the last, I don't know if it was quarterly or whatever. Obviously, it's his family office, not personally him, but people found that in his transactions that he is currently a holder of SoFi Technologies. So very funny.
Interesting.
Yeah. And the market, I think, actually celebrated that the stock is up today, up 4.6%.
Yeah, Robinhood's also up. So I don't know if it's fintech related or maybe he also owns Robinhood.
He owned a lot of companies, so I wouldn't be surprised. But I think there's a mix of Clarity Act being passed that also happened today. I don't know if you saw that as well.
Yeah, I saw, no, not today, but a couple of days ago, some hints that it's going to pass. But okay. I mean, I guess that the pure headwind right now is still fears of maybe a rate hike for the year.
Yeah.
I mean, yeah, it's now at 37.4% that we're going to have a 25 basis point increase by January 2027. That was 0.6% a month ago. So
how do you feel, by the way? Like, this is something that I've been thinking about. Obviously, we have artificial intelligence companies and like the neoclouds and everything. The component names are all doing so unbelievably well. But oil's still over 100. We have CPI, PPI putting out way worse numbers than expected. Job numbers were better than expected, but that also points to a rate hike. Like, how much can we grow in this industry, in the AI industry, in the face of a bad macro? You know, do you think that we're going to have a broader market worry if things become still more unaffordable for the average person?
Probably yes, but based on the comments from every big company, financial, credit cards, it seems like the consumer is still doing okay. Now, the longer oil stays above $100, the worse things can get. And even the high FICO members that SoFi have, they will feel the high energy prices eventually. So that might hurt even the best of members. But so far, again, the CPI, PPI report, we've had a couple of good ones. The market didn't care. Now we have one bad one. And of course, the market cares way more about one bad than three good ones. So we'll see. We'll see if the next one is also that bad. If the next one is that bad, then okay, then maybe you should start to worry. But we do also have a new Fed chair. maybe he's going to use some other tools that Jerome didn't use over the past couple of years. I don't know. Again, with macro, I can speculate here until tomorrow. Honestly, I don't know. What I do know is just the companies that we own and what management is telling us. So, ooh,
Bro, Figma's up almost 20%. Holy crap, from $20 to $24.
that's $2 billion extra
Yeah.
in value. Must have been a big
huge double beat. Revenue up 6%. They wanted 316 million. They got 333 million. Revenue is up 46% year over year. Massive. EPS, on the other hand, expectations was 6 cents of EPS. They put up 10 cents of EPS. A beat by 67%. EPS is up 233% year over year. Good numbers so far, but we're going to get more numbers going forward. Sorry, I didn't want to cut you off, but that just came in.
Yeah,
We've got a little bit more time. Dlocal numbers should be coming out any second now. But Nubank numbers should be out at 4:15. So we got some time on that one. I will I'll go look for Dlocal and Figma numbers. Sorry, man, I didn't want to cut you off.
I was anyways done with my little explanation. But talking about Figma, it's a big, it's a solid beat, good growth, and that's the team with most of software names over the past couple of weeks. Like, they're not dead. Most of them have beaten their own guidance or the estimates, and yet stocks are down, doesn't move at all. Shopify, I know you own it. I know it's Canadian, but if I can get Shopify in the low 80s, I would be very happy.
Yeah, it is one of those ones where it's one of those companies that everyone would feel very comfortable owning, but some people don't feel comfortable owning it at this price. And that's fair.
I wouldn't want to open. Yeah, I wouldn't want to open at this price. If I owned it, then something else.
Yeah. We're seeing adoption across the organization. Teams across Rocket are using Figma Make to rapidly build dashboards, craft presentations, and explore new customer experiences, all built on top of our shared design system and brand foundations. Very cool. I think the reason why their presentation looks weird is it's actually like a video, and then they take screenshots from that video. But maybe we can go watch that later.
Yeah, so Dlocal is out. It's a miss on EPS by 13 cents. Expected number is 16. Actual number is 14. Revenue is a beat by 1%. Revenue is up 55% year to date. EPS down 22. So something happened with profitability this quarter. But revenue is still up 55.
Do you think it's just the take rate's been constantly going down?
Yeah, but so much. It's down 7% year over year and 22 quarter over quarter. So it's a bit aggressive for just take rate. I guess we'll have to. Let's see what happens.
Total payment volume, TPV, is up 73% year over year. This is a take rate issue. It has to be.
If TPV
total payment volume is up
so
73%, but revenue is only up 55%.
Yeah.
And gross profit's up 40%.
Yeah, gross profit margin is only 35%, so that's down 4 percentage points year over year.
Yeah.
But operating profit is up 15% year over year.
Let's see what else. Adjusted free cash flow for the first quarter was 14.7 million, down 63% year over year. Why was that? Primarily explained by temporary working capital effects, including timing and tax credits, netting, and higher receivables from our advancement operations, sorry. Figma's only up 10% now, by the way. I think I cut. Oh, you can see my screen. Okay.
Yeah. Yeah, no, so apparently, yeah, there is this excluding the prior period tax adjustment. So net income would have been up 11% year over year instead of down 10%. Okay.
Yeah. I think that might be why the stock is not reacting too bad right now. Only down 2.5%.
But I mean, to me, TPV being up 73% year over year is, it is for now what matters. Oh, that's great. 73%. Even because last quarter was already, what was it? 60? Maybe a bit
Yeah,
more.
or 60 something percent.
Let's see.
And some of it can be the mix shift. Oh, now Dlocal is falling down 5%, 5.3. And we should be getting new bank numbers here in the next 5. So if that one falls too, I'm going to flip my desk.
Yeah, so last quarter TPV was up already 60. I mean, also 70%. So it's 2 consecutive quarters of 70% year-over-year TPV growth. I mean, okay. Market is not interested.
I only have the
press release.
Yeah, in like this terrible format where I have to read it
Yes.
in a small box. You have that too?
Yep.
I
Still
hate
no
this.
presentation.
Yeah.
Still nothing.
And they put together a good presentation. I really like it. So down
Yes.
9% now. Oh my gosh, you can get Dlocal right now for $11.50. Is payments just not the space? Like is the take rate on payments just essentially headed to zero?
Probably not to zero, because otherwise everybody's killing themselves. But
Yeah.
it's going down. But
Again,
again,
Stripe is $150 billion.
If it's going down slower than TPV, it's still more money in their pockets.
Yeah.
But I assume there's something, yeah, maybe with Egypt or maybe with Africa, something happened there. But
yeah, I'm still not going to act like revenue's not up still 55%. Even if take rate is going down, they still made $335 million in revenue.
It's a profitable, fast-growing company that's still very small in a huge market.
Yeah. Big total addressable market.
Maybe because guidance is unchanged. Maybe the market doesn't like guidance unchanged, just like with SoFi. We should have raised guidance. In this case, they did not, but...
Let's see here. Down now 10.6%, 10.9%. If it's not AI, it's not doing it for people these days. Unless
Did Ford say anything today about AI data centers or something for it to be up 6%?
Ford?
Yeah. Energy storage bet, apparently. Okay.
So a little bit, yeah.
Come on.
Will you be buying more Dlocal, or you want more information so far?
I would obviously want more info, but for now, I'm just waiting, because it seems like, because even with SoFi, like I don't mind buying more, but I don't see why I have to fight the market time and time again. So I'd rather just wait, because I'm already quite exposed. Oh, finally.
I also sent it to you.
Yeah, I saw. Thank you.
Okay, key takeaway. Wow, this looks like CoreWeave's colors and designs here. Sorry, let me make it full screen. Total payment volume surpassed $14 billion for the first time, up 73% year over year, 6 consecutive quarters of 50+% growth. Record gross profit of $119 million, up 40% year over year. Operating profit of $57 million, excluding prior year's tax adjustments, was up 25% year over year. Net income was $52 million if you also exclude the tax adjustments, which would make it up 11% year over year. We're expecting higher operating expenses from 2025 carryover, operating leverage to improve in the second half of 2026. Guidance remains unchanged. Yeah, that's what you were saying earlier.
Okay, so it's the same as 3 months ago. So I don't know what the market here is freaking out about. I guess again it's the gross profit margin coming down.
It said they're operating in 60 plus markets. I think that's up, right? I thought it was like 55 markets before. Or it might have even been like 45 markets. I don't remember it being 60 plus markets.
Yeah, no.
Wow. Including new markets such as Qatar, Kuwait, and Oman.
Okay, not the greatest time to add those markets, but fine.
I'm happy to have them, but they're probably not contributing much. 71% of the world population unlocked by enabling access to emerging markets. Wow. Okay. We have Nubank numbers should be coming out any second here, so I want to keep an eye on that one as well. Maybe you want to go through the press release, and I'll go looking for Nubank really quick.
Yeah.
Okay.
You want to share the screen?
Yeah, you're not sharing it.
I am trying. Oh, no, this one.
Dlocal coming back down 5% now versus down 10 earlier.
Yeah, because I think the market is freaking out in Adobe.
Don't you have Adobe shares?
No.
Oh, okay, my bad.
I have close to, no, I don't have any software names.
All right, I apologize for the slander.
But I'll take any joke on software every day of the week. But no, Dlocal, I don't know. The market is probably freaking out because of these adjustments here. This net income, if you exclude the 2023-2025 one, it would have been up more. And maybe that's why the market is freaking out right now. I mean, freaking out. The algos are probably not understanding.
Yes, yeah, you only have Adobe interviews.
They like me so much, I don't even need to be a shareholder to interview them.
Maybe that's why I thought you were an Adobe shareholder.
Yeah. Okay, so TPV is still 50 to 60% year-over-year growth around the upper. So still 60%. We already have now 70 plus. So that's good. Gross profit. Again, gross profit is still supposed to be 27.5% year-over-year. Operating profit closer to 30. I don't know. They say here, over the next 3 quarters, OPEX should benefit from the end of the investment cycle. I thought the market would like that. Acceleration of our automation agenda, driving headcount reductions. Market should like that. Corrective OPEX action and lower share-based payments expense due to the grading vesting attribution method. I don't know. I don't know what the market doesn't like from here. It's a fast-growing company. Investment cycle is coming to the end here, so margins should inflect. I don't know.
Yeah, it's bouncing all over the place. We hit $11.11, then back up to $12.50, and now we're sitting at $11.87 again. Yeah. So they can't make up their mind right now.
They'll make up their mind probably in the call, but
I know I'm kind of thinking, do I buy a little bit before the call? Because usually the call does well, no?
Yeah, but at this point, what does it matter? Like, do you think it's going to go up 20% now until tomorrow?
I mean, I don't know. I kind of like buying companies that grow at 70% rates.
Yes, but it's going to be the same company tomorrow, but we'll just have, tomorrow in an hour, but we'll just have more information. So you can maybe buy even more or you can buy a bit less.
That's fair. Figma now up 8%. Nubank flat in the after hours. Let's see what else. Rumble, I don't know if anyone cares about this name, down 10%, and StoneCo is up 6%. of 6%.
Hmm.
However, falling fast, down or only up 4 now.
So gross profit is up quarter over quarter and year over year. Fine. Argentina is rebounding very fast. I mean, Argentina, I think, is still not where it's supposed to be, but it's a huge, huge market that is heading in the right direction. And companies like Dlocal, Mercado Libre is new in Argentina, or they're willing to go into Argentina. I can't remember.
Nubank is wanting to go into Argentina.
Okay, which makes
Mercado
sense.
Libre has a deep.
Yeah.
They're in there.
It's a big market that was completely broken before, but I think there is a lot of value to be found in that market. And when that starts to grow in a stable way, it's a pure tailwind for these players. And we see it now. It's up 86% quarter over quarter gross profit and 46 year over year. Brazil is still big. There are, although, elections in Brazil later this year. So that's going to be one to watch out for.
Yeah. I still don't have Nubank's numbers. Yeah. Joshua Kushner just did $100 million Shopify investment. The Jared
Oscar
Kushner's
Held
brother.
Yeah, Oscar Held's founder.
Yeah. You know this. Yeah.
This one I do own.
$100 million Shopify investment from him.
Not bad.
But still no Nubank. I'm surprised. I guess we got to wait. There was also a comment. I don't know if you care about this at all. A comment from Anthony Noto on the Clarity Act. SoFi CEO said, Clarity Act advancing sends a clear signal that thoughtful crypto policy, I'll throw it up on stage.
Mm-hmm.
That thoughtful crypto policy is bipartisan and good for American consumers and American competitiveness. Crypto has been in need of a durable regulatory framework, and we're that much closer to one, keep up the momentum. Sorry, I read that all weird. I apologize. I might be dyslexic. Crypto has been in need of a durable regulatory framework, and that we're much closer to one. Keep up the momentum. Congratulations to all involved. Jeez, that was brutal.
Okay, good enough. Although it's going to be funny when this thing passes. There are some crypto momentum politically wise, but crypto for Robinhood is going down the drain slowly but surely. Like, I don't know if you've seen the month over month, the monthly numbers that were shared yesterday.
Yeah.
To me, I don't mind, because the less Robinhood gets attached to the whole crypto, either bear market, winter or not, the better it will be for the stock. Because previously it was like Bitcoin is up, Robinhood is up. Bitcoin is down, Robinhood is down, even though the rest of the business is way bigger than crypto, which prediction markets are now a bigger business than crypto for them. But yeah, it's going to be a positive thing for both of these companies anyways, although I rather both of them focus on other things, but fine. I'll take it.
Yeah, hopefully it's just additive, you know?
Yeah.
I think for SoFi as well, they have a lot of stablecoin activity and through big business banking and stuff like this, where Clarity Act is going to play an important role. Really quick, though, on Figma, up 8.3%. They also raised guidance. It was at 1.36 billion, and now they're calling for 1.43. So pretty large raise in guidance. Q2 and full year both got raised. Here's some commentary from the CEO. They said Q1 was an incredible quarter for Figma. Revenue growth accelerated for the second consecutive quarter, and customers are going bigger and broader with Figma than ever before. Our outperformance in Q1 was fueled by stronger than expected seat expansion across entire organizations, driven by design's growing importance and adoption of our AI products. And Dlocal back into the $12 range. Nubank up about 0.9. I still don't have numbers for this company just yet.
I see Vlad also tweeted out about the Clarity Act 37 minutes ago.
What did he say?
I'll let you read because you've done such a great job.
Oh my gosh.
Before.
You make me feel silly whenever I'm reading. The last time I read, you said, okay. Crypto and tokenization need clear rules of the road in the United States. The Clarity Act is a step towards consistent customer protection and a path for more innovation to happen here. Still more work to do, but great to see momentum. Sorry, the reason why I keep scrolling down is I have my camera is slightly in front of the text, so I have to like move it out of the way. Nubank.
How many
now
screens do you have? 3?
4.
So 2 eyesight, 2 at the top?
Yeah. Yeah,
Nice.
it's 4 panels, I guess.
So Shopify is back to $100 per share almost. There goes my wish.
Everyone thinks whenever I'm looking at my stocks that I'm looking at the ceiling, but it's just here, and then I've got my audio stuff and Discord here. You're over here. And it's too much. But
if you feel comfortable, then it's not too much.
Well, I feel comfortable in operating the live stream, but my neck is not in good shape. By the end of a long stream, I'm done, man. I gotta go stretch.
Apparently, stretching is very good. So I've heard.
So we've heard.
So still no new?
Not that I'm seeing, but I was on the site earlier.
So maybe in 4 minutes.
But yeah, I still don't have it's not on their site, looks like. Filings. I don't see anything there. Results center.
No. Nada.
There should be one standard for IR pages. And the fact that all these companies do it differently drives me nuts. And then Nubank will invite you to a Zoom call to listen to it just.
The earnings call thing for that's completely stupid. But also the time they release the earnings report, like why? Why do you need an extra 20, 15 minutes? What, didn't you just have like a couple of weeks to do? I just don't get it.
Yeah. IREN needed like an hour and 20 minutes extra.
Not to release the NVIDIA stuff, just to release the horrible numbers.
I don't know why I thought this was funny, but whenever I was looking at the Figma thing, the design company, they named their earnings presentation file just the number 1. I just think the lack of attention to detail is funny there on Figma. Yeah, I don't know if you could see this just up here. I've never seen it that before. Like usually it says like, I don't know, Figma earnings presentation Q1 2026.
Okay, so the press release has a real name. The presentation, I don't know. I have a real name for the presentation.
You have a different one than me?
I have Figma Q1 2026 earnings presentation.
Well, I'm special.
So it would seem.
.png. Okay.
No, still nothing on my end for new.
Okay, one quick second.
Decline. 1 second. So, what do we have? Some moves here. Down 1% maybe? I don't know.
Sorry, my beautiful girlfriend brought me some food.
What was that? Looked like the Cheeto.
No, a sweet potato fry.
That's very good.
Yeah. It's like a Cheeto.
But healthy.
Yeah. Way less tasty than a Cheeto.
Cerebras up 68% today. Nice.
Oh my God. Yeah, we get to look at Cerebras in after hours. Up another 1%. I don't know where that's going to settle out. Do you have any ideas?
What was the market cap? 67?
Yeah.
66.
67 billion.
I don't know, man. Since this is not software but AI semiconductor related, then I guess it will do well, but I wouldn't be surprised if 6 months from now it's worth way less. Honestly, I haven't even looked at this company's financials, so I don't know how much money they're making.
Okay.
Huh.
Yeah,
Dlocal
Dlocal
is
call
only
is in
down.
30 minutes. New Bank, someone's saying it's at 450. I'll be so angry if that's the truth. I
What,
get
the
10
report?
minutes to look at the call. Look at the numbers. And they have a huge presentation to go through too. They give so much information. I usually find that with the Latin American companies, because obviously there is this skepticism in these businesses because they don't necessarily have to abide by US GAAP. So I think companies like Nubank and Mercado Libre and Dlocal almost show way more information to try to give additional transparency.
I fear too much attention will go to their US expansion thing, even though it's going to be a super small part of the business for now in focus. But when they talked about expanding outside their core markets, the market just didn't like it. Which, okay, fine, but then again, when you saw those little squares where you see the total addressable market, and then new right now, it's like super, super small, even in Brazil, which is a very mature market. So again, their core markets is still the most important ones, and they still can grow a lot. And the US is just a plus. Which, even if they take a small percent of it, it's good enough. Well, didn't one of the co-founders, the lady, say something in a podcast a couple of months ago? Like even Florida or something, taking just a small part in Florida is almost as big as what they have in Brazil.
I don't remember, but obviously the average earnings of a United States customer, and which would translate to average revenue per user, is going to be so much higher. But I am curious to see what the cost to serve is going to be in the United States. Is it going to be similar to, Brazil and Mexico, Colombia? What APY are they going to give? Because they've typically given an APY that's above the interbank rates of the countries that they're in. So I'm so interested to see what's that going to look like if they enter the States. I don't know. Okay, yeah. What else in terms of Dlocal? Does this look like a cheaper company than it was from a last 12-month basis?
Seems like it. TPV up 73%, revenue up 55%, gross profit up 40%, operating profit up 15%. Net income would have been up 10%, 11% if not for that.
But so hold on.
Tax adjustment.
So PE ratio. If we're replacing Q1 of 2025 with Q1 of 2026, the PE ratio technically went up from a GAAP basis. Non-GAAP, if the adjustment didn't happen, but technically the company from a PE perspective and a free cash flow perspective got slightly more expensive. Is that fair to say?
Yeah. Yes. But still not that expensive.
But the price to sales went way down because they grew by 55%. Only of one quarter, but still. and they have more customers now than they did before. What was their net retention rate? I remember that last quarter was crazy on Dlocal, something like 140 something percent, right?
I think 146 maybe. Let's see if they have it. 152. 152.
It's higher than Palantir, I think.
Huh. Huh.
Which I think is actually a cause of their
But that's
their
because
margins, is because their customers are getting bigger and bigger and getting like essentially bulk deals with them.
Exactly, because it is the biggest customers. Like, because I mean, the percent of the total revenue is still 62% for the top 10 merchants. So it makes sense. But it's for now it's good, because that means that the huge customers, which are the Netflixes of the bunch, are continuing to grow with Dlocal, which is a very good thing. I sent you a link in the private chat where she talks about what I just said.
Do you want me to play it?
Yeah, if you want. It's 2 minutes.
Yeah. Okay.
What we've learned after doing 3 of them, is that building a new country takes a lot of work. It's not easy, right? Of course, we're getting better, and building Mexico was better than building Brazil, and building Colombia was better than building Mexico. And we're working really hard so that building the US is going to be better than, the previous ones. But it's still a lot of work, of course. These are regulated sectors. We have chosen, there are different fintechs out there that they choose a different path. They're not necessarily too keen on being regulated. We're on the other end of that spectrum, right? Like, we've always embraced regulation. We've been operating regulated entities for over 10 years now. So the way that we do things takes a lot of effort. We wanted to find a moment in which we could afford to invest that capacity, which is not a big distraction to the company. We have less than 10% of the resources of the company actually dedicated to international expansion, platformization. But at the same time, we said, well, if we're going to put in the effort, why not go for the opportunity that is the biggest opportunity? Because, building a country like the US that is huge, is the largest financial services market out there, it's almost the same work as building a much smaller country that is like 5% of it. So even a sliver of the US market would be more meaningful to us than any other country that we could tap into right now, right? And even a sliver of it could make this business as relevant for us as Brazil is. Because the reality is, like, there's one figure that we're always blown away by, which is, in the next 5 years, the US financial services market is going to grow the size of a Brazil. Right? You have states like Texas or California, even Florida is about to surpass the GDP of Brazil. Wow. So when we put things into perspective, we don't have to get to where we are in Brazil, in the US, for this to be meaningful.
Yeah, that's insane.
So voila, if you can put less than 10% of the company's effort into growing into markets that is going to be bigger in the future, or today bigger than their biggest market that they're in right now, I mean, why not do it?
Also a ton more competition, though.
Yes, but I guess Latin American name, you have Latin American people in the US, they might like it.
Definitely.
Plus, in Miami, they sponsor Inter Miami Stadium.
Mm-hmm.
They sponsor Mercedes F1 team. So what's the market cap of NU right now? Is it still 660 or
62, 63 billion?
Yeah, okay. I'm not saying it's 100x or whatever, but
yeah,
is it going to be more than $100 billion company in the future? At this rate, why not?
Yeah, I don't see how it won't be. I mean, they haven't really been faced by meaningful competition. They have been taking market share in every single segment that they've entered. Quickly became some of the largest financial institutions in Mexico, obviously Brazil, but will soon be one of the largest financial institutions in Colombia too. I just never understood why it took them so long to just continuously obviously it's their strategy. They're choosing to sort of land and be very like aggressive, but also like diligent in the way that they're growing, rather than like a Revolut that's sort of like going after 35 countries. Nubank has just been like, okay, we're just going to dominate this country, and then they expanded to Mexico, and then they expanded to Colombia, and I don't know, they've just been sort of slower with the expansion than I thought that they would have over the years that I've held them. But not to the, like, you're not, I don't think there's a trade-off there. I think that, the growth has been great. It's just the strategy is different than I would have thought it would have been.
Yeah, but I mean, compared to, I don't know, is Revolut available in Latin America now? Maybe.
Yeah, I mean, they're going all over the place. I know C Limited tried to, or like C Money tried to come to LATAM, and then they failed or something. They left.
I mean, because Brazil itself is over 200 million people, so you can understand why it makes sense for them. I mean, 200 million is what, probably 1/3 of Europe. So, so it's already pretty lucrative for one company. I mean, Revolut is very dominant, I would say, in European markets. It's growing like crazy. But yeah, for Nu, I guess it makes sense also to move slower in those markets because, again, political sphere, politically wise in these countries, it's not always that stable. Economically, it's also not as stable as European countries. So you don't want to expand too quickly and then completely get screwed over by, I don't know, something going the wrong way, geopolitically or politically inside the country. So I guess it makes sense. And now as more and more countries in Latin America are trending in the right direction, I guess it's good for them because now they have a good reputation at least.
Yeah. By the way, look at the Dlocal's recovery here. At one point, $11.11. Now only down 2.7%. And they did miss on EPS. There's definitely parts that, they took on a larger tax charge than they thought they would, or an adjustment, sorry. And so that was to be unexpected, and that hurt the stock or hurt EPS. So being down 2.7 is a lot more stomachable than being down over 10% whenever the numbers came out.
Now you're less happy that you didn't buy shares, or you don't mind?
I don't mind, but I am curious to listen to the call, and like this has been a lot of quarters of growing at sort of this 40, 50+% rate. Like the fact that we grew by 55%. Here, let me bring up sort of what I'm looking at. The fact that we grew at this amount, like the comp was a much slower quarter than before. I'm interested to see what the growth rate is going to be from June going forward, and I'm pretty sure the outlook says that they're still going to be able to hold up a very fast growth rate, along with TPV. I think they said 50 to 60% average growth rate for their guide. But still, it is hard to compound on really hard comps, and this has been the last 4 quarters. Revenue has been very, very high. So if they can continue to keep that up and the stock stays flat, if not down, it does make me, question buying more. Like it would lower my, like right now I'm in the red for Dlocal. It would lower my cost base. I'm buying into a company that is much bigger now than whenever I first bought it. It's just payments is not in vogue. Let's say if it's not AI, it's not getting a premium.
That is very true. Not AI, not data center, no nothing. You have a?
Yeah, it's a dog. She's back there. Come here. Up. She doesn't want to. Come here.
She's a camera shy. Oh no. Hello.
But she's
Cute.
looking at my food.
Yes.
Okay. Call should start in 15 minutes or so. And I guess the numbers are coming out at 4:50 because holy crap, we still don't have new bank numbers. And it's been a little bit.
Okay, so what are your thoughts on new entering the US market, competition for SoFi, competition from Robinhood, maybe Revolut? Because
Yeah,
I've seen a lot of people in the chat asking basically what's the
no
deal with that?
competition there. I don't think that Nubank is going to go after, at least early on, an affluent customer. I think that there's this large swath of customers that they realize, like, the United States actually does have a large Hispanic population, a population that has friends and family that all use Nubank. And I think that there is this brand recognition for Nubank that they're going to win over a large swath of customers, very similar to what they did in Brazil, where it's these people don't have good relationships with existing banks. They might not have credit history. Nubank's willing to take on risk by giving, small credit limits to these people and slowly building it up over time. They have some of the lowest costs to serve in the entire financial market. So they can actually take on these customers and still make it profitable. Whereas, the traditional large financial institutions, they want nothing to do with those people. They'll charge high maintenance fees, have account minimums because it's not profitable for them because they have such high cost to serve that they don't want an average consumer or, something like this. So I think the opposite of the customer that SoFi is going after, which is super highly affluent, I think Nubank is going to go after people who are potentially underserved, underbanked, non-affluent, and they're going to see some success there. I'd be more worried for Chime. I think there might be like Chime and Nubank might be fighting over customers. That seems like a more similar type of customer overlap, or a Cash App or something like that.
Okay, fair enough. I don't know. For me, the conversation is always, if there is a new competition, it's always going to be a competition for SoFi, for Robinhood, and for some strange reason, it's never a competition for all the legacy banks that are out there.
Well, I think people agree with that, but they just don't hold those companies.
Yeah, but
they're worried about their own portfolio.
True, but the market is very much saturated with old institutions that are clearly getting some of their market share eaten by the new players, which could be new. In Brazil, it's definitely new. In the US, it's starting to be SoFi a bit. Robinhood taking with Robinhood banking. So the market is quite huge. Just because there are new players that are coming in doesn't mean they're directly only going to take or compete with SoFi. There are a lot of other banks. Yes, there's the big banks, but there are many, many small banks that, might not exist in the future, I guess, if they don't evolve.
It's called Pure Life in Chat says, Tanner, can you see the future? Well, no, ask my opinion. It's just an opinion. The amount of weight that you put on that opinion's up to you. I've been wrong a ton. Not saying that's the absolute way that Nubank is going to do things. I'm just taking from what they've done before and just assuming it might be a similar path. I could be wrong. Ultraviolet Nubank cards have been big. Maybe they just go straight into affluent customers in America. Who knows? Okay. I'm still trying to get some more information on Dlocal. I don't know if you're still going through the report or not.
No, I'm waiting. I'm just checking new because maybe that's coming out in a minute. But then we'll just have a listen to what they have to say during the call, and they probably already tell us if we're missing something, especially with regards to customers, maybe some new deals or something.
CNBC reports that SpaceX is planning to publicly disclose its IPO prospectus as soon as next week. Wow.
Rocket Lab going even higher or what? It's like 132, I think. 130, yeah. Oof. It's crazy. I asked my father because I told him to buy it at $4 and he still has it. It's a 32x.
That's crazy.
I'm like, you see? This is your retirement gift.
Yeah. I'm not going to buy you a car, but I'll buy you the stock that'll get you the car.
Okay, I don't know what car you think he needs to drive now with this Rocket Lab position, but he can buy a nice car.
It's just what my dad's always calling me about. He's like, when are you going to get me this Tesla or this Corvette or something?
Although he likes motorcycles more, so
yeah, there you go.
Buy a nice bike.
Yeah, but that was personal. That was coming through his personal life experience. My dad's always asking me about cars. That's funny.
It's 51. Still no new report.
They decided not to report today. They're doing the SMCI right now, or no, sorry, IREN, not SMCI. Well, I'm not SMCI, but just not just not in most recent history.
Yeah, I was double checking the date if we're actually on the right date, but we are.
Yeah, they never usually come out late, right?
Honestly, I don't know. I mean, since their call is in 1 hour and 8 minutes, then maybe that's why. But I'm
gonna use the bathroom real quick. If you could just hold it, I just need to go pee, and then we'll listen to the call together.
No problemo.
Oh, sorry, should have kept that up. Unless you want to share or something.
No, you can keep it.
I'll just keep it on Dlocal. All right, one second.
So what do we have here? Dlocal still down 4.4. NU is flat. Nvidia flat. What is good food? No idea. Cool ticker though. Food. Cerebras is up another 3% almost after hours. SoFi. Nano something is up 4.8%. What are those weird tickers? Stoneco is still up 7.8. Figma is up 8.5. Applied only 2%. The pump and the fade. Ooh. The pump and the fade. Let's see what we have in the chat. Rocket cars are expensive, indeed. I got a nice comment. I am a nice human being. Well, thank you very much. You too. You too.
Okay.
Yo, Tanner, what are all of these weird tickers you got there? Good food. What is that?
I have no clue. Someone said that it was, someone put it in chat and they said it was up like 20%. And then I looked and then it was flat. So I was like, I have no idea what they're talking about.
And this? Nano nuclear energy.
Yeah, these companies are reporting today.
Okay.
Rumble, Stoneco, Figma, Applied Materials, Dlocal, NVIDIA. Really, the only two that I'm following here are these, and a little bit of interest in Figma, just because I like the tech space. But these are the ones that I have actual interest in. These are just my recent tickers. This is not my watch list. These are the main companies I actually follow. But yeah. Is that what you guys were doing? Was roasting my recents?
No, I was just looking at the recent. I was like, what is this? What is like? Good food had a good ticker. Food, not bad.
Yeah. Maybe they were just talking. New earnings are out. Someone just said.
Someone said it half an hour ago as well, and
yeah.
And I got duped.
Means nothing to me. Okay. I'll make sure I have Dlocal webcast as well.
Yeah, the first is going to be a pre-recorded Mercado Libre style reading of numbers, I think, from Pedro and the CFO.
That's not too bad.
Yeah. No, still nothing from Nu. Nada.
Last thing I see from NU was back in May 7th. NU's AI-powered credit model extends access while maintaining portfolio quality. Interesting. I'm so curious to see how AI is going to accelerate like all businesses. Like, you know, portfolio, like credit portfolios, reaching out to customers, customer service, essentially going to touch every aspect. But I don't know if anyone's thought about how that affects margins over time. If you're, you know, essentially bettering every aspect of a company. I'm so interested in that.
When do you think we'll know? 2 years? 3 years? 1 year?
I think it'll be a slow drip. Certain problems will be solved over time. And they're only going to improve as the models improve. So I don't think it's the same way that the internet improves margins for companies. I don't think it'll be a thing that's ever done. That we like, you know, there it is, all done. There'll be companies that come out and do it better than the last, and they'll be acquired, and, you know, new tech stacks will be created. But I think the immediate benefits will probably already be had today, and we're just going to slowly see margin improvements. Well, actually, right now, I think we're kind of in the testing phase, and so the margins are actually going down as companies are spending $1 bazillion on tokens. Revenue up 62%, EPS missed by 1 cent, 6% miss. Is it really out? Because I literally just looked.
And I'm just reading the last press release, which was the appointment of the new chief product officer, which will go into effect in 4 days. So I guess maybe they'll talk about that a bit. But
I still don't see it.
I still don't. No, nothing. Nothing.
But Dlocal's call starts in a few minutes.
Yeah.
Sorry about that. Just hit the fork. And we will listen to Dlocal's call, see if the stock turns around at all on that news. Along with that, hopefully Figma also does well on their calls, which usually they do. Honestly, they explain kind of the new products that they're working on and the relationships that they've had with OpenAI and Anthropic and stuff like this. And the stock actually usually does well during earnings. And then it's the 3 months between earnings where people worry about Mythos and all the other products that are coming out and sell this company down to $2 billion.
Yeah, I know. I do wonder when the market flips from we are just going to ignore and push all of these highly profitable companies down, and then say, oh, actually, they just keep beating estimates and they're still growing, they're still profitable. Maybe they shouldn't be trading at, I don't know, single digits forward multiples. But when will that happen? I don't know. I don't know. Because even with Figma, it's a high growth company, but even for them, I think usage will change. I think a Claude, a Gemini, a ChatGPT is going to be the dashboard that many people will use, and through that dashboard, they will use Figma because of all of the integrations. And how will that business model work? No clue. Usage-based, goal-based, credit-based, whatever.
Yeah.
Too early to say, so I guess that's why nobody wants to buy them for now, even though it's up right now, but it's still down.
This big green candle as you're talking.
Yeah.
It's too funny. Okay. The call should be starting any second now. By the way, I completely agree with you on what was I just about to say? Sorry. On Figma. I think that there's definitely going to be some software companies that pivot from seat based or some hybrid mix of seat and usage base, but I think we're in a weird area where we don't know the answers, and so it kind of goes in like the too hard bucket. Like, is there companies with maybe they're less cheap, but also a higher certainty of actually coming true? Okay, there's still music on Dlocal's call, but I will switch over the second I hear voices.
I hear voices in my head.
Should talk to someone about that.
I'm talking to you.
Wrong guy. Okay, are people trolling right now? I'm still seeing people talk about missing 1 cent on Nubank. Okay, we got the call. Good luck, everyone. Where the heck is this? There it is.
Good afternoon, and thank you all for joining our earnings call today. If you have not seen the earnings release, as always, a copy is posted in the financials section of the Investor Relations website. On the call today, you have Pedro Arnt, Chief Executive Officer, Guillermo Lopez Perez, Chief Financial Officer, Christopher Strohmeyer, SVP of Corporate Development, and Mirele Aragao, Head of Investor Relations. A slide presentation has been provided to accompany the prepared remarks. This event is being broadcast live via webcast, and both the webcast and presentation may be accessed through Dlocal's website at investor.dlocal.com. The recordings will be available shortly after the event is concluded. Before proceeding, let me mention that any forward-looking statements included in the presentation or mentioned in this conference call are based on currently available information and Dlocal's current assumptions, expectations, and projections about future events. Whilst the company believes that our assumptions, expectations, and projections are reasonable given currently available information, you are cautioned not to place undue reliance on those forward-looking statements. Actual results may differ materially from those included in Dlocal's presentation or discussed in this conference call for a variety of reasons, including those described in the forward-looking statements and risk factors section of Dlocal's filings with the Securities and Exchange Commission, which are available on Dlocal's Investor Relations website. Now I will turn the conference over to Dlocal. Thank you.
Good afternoon, everyone, and thank you for joining us today. This year, 2026, marks 2 important milestones for Dlocal. 10 years since we founded the company, and 5 years since our NASDAQ IPO. Before I go into the quarter's results, I wanted to reflect briefly on what has been built over the past decade and why it matters for where we're going. The story of the past 10 years is one of consistent compounding growth built on a vision of helping world-class merchants reach consumers across emerging markets, or as we like to call them, the markets of the future. If we look back at 2016, we processed $100 million in TPV in a single country. On the last 12 months basis, as of this quarter, we've crossed $47 billion across the entire global South. So we now process more in a single day than we did in our entire first year of operations, only a decade ago. That's an almost 90% compound annual growth rate sustained over a decade. And what is most notable about that trajectory is not the scale itself, but the consistency. Throughout every phase, from Latin America into Africa and Asia, from a handful of payment methods to over 1,000, from a startup to a publicly listed company, the strategic model has not changed. One API, deep local infrastructure, continuous expansion of payment method coverage, licensing, regulatory capabilities, and products. The same focus on helping merchants operate efficiently in markets where the next wave of digital consumers is moving online. Dlocal now operates in more than 60 countries, including new markets such as Algeria, Qatar, Kuwait, and Oman. We now hold 38 licenses and authorizations across 26 markets, with 16 additional applications in process. Our platform reaches approximately 70% of the world's population, serving over 760 enterprise merchants through a single API. It took a decade of investing in infrastructure, building regulatory IP, forging relationships with local ecosystem stakeholders, and learning how to operate at scale in markets that most find too complex to enter. Those foundations are not easy to replicate and even harder to outperform. The reason all of this infrastructure matters is quite simple. Localization is what ultimately drives success throughout emerging markets. Local payment methods are no longer alternative options. In many of our markets, they are the primary way consumers transact online, and their share continues to grow. For merchants, supporting them is not just about improving the checkout experience, but also reaching consumers who do not transact in any other way. In Peru, for example, Yape drives 40% net new customers to some of our merchants. In South Africa, PlayFlex drives 80%. And our own innovation layer, such as Smart Picks and biometric-enabled Picks, lets us drive differential performance on top of those existing local rails. Even within the global credit card schemes, local processing is key to maximizing authorization and conversion rates in emerging markets. Compared to international acquiring, when merchants use international card rails to complete transactions, we're able to deliver up to 20 percentage points conversion uplift in certain markets. The same Visa or MasterCard card converts significantly better when processed locally. But Visa and MasterCard are only part of the story. There is a growing base of local card schemes emerging across the global south. In Saudi Arabia, MADA represents around 90% of cards issued. Verve is roughly 60% of Nigeria's digital payment market. And Misa is held by about half of eligible adults in Egypt. If you don't support these schemes, you simply cannot win in those markets. That's what NU Dlocal is. Local payments, local processing of global card schemes, and local scheme coverage all in a single API. Vertical diversification is the other dimension of resilience to our model. Many payment companies tend to be concentrated in one or two verticals. Our platform has demonstrated the ability to scale across a wide range of industries and use cases. Every single vertical in our portfolio grew between the first quarter of 2024 and the first quarter of 2026, and our mix has become increasingly diverse across categories. E-commerce remains our largest vertical. We work with half of the top global platforms in our markets, and they keep expanding with us. In ride-hailing, we serve 4 of the 5 largest players operating throughout emerging markets and continue to expand global deals with them. For several of those players, we also process their on-demand delivery businesses. Both of these verticals inherently carry a higher local-to-local component with stronger adoption of local payment methods, which supports the strength you are seeing in our local-to-local volumes. In remittances, one of our fastest growing verticals, we continue to partner with major players and support their geographic expansion, driven by sustained strategic focus and ongoing merchant onboarding. Looking forward, we're excited about the prospects of our travel and gaming verticals as we continue to build these vertical payment flows that optimize for the particularities of multiple industries. Perhaps the most compelling illustration of our business model in practice is at the individual merchant level. So I wanted to take a minute to walk through 3 examples of top 10 TPV merchants for us that demonstrate how it is that we scale alongside our customers over time. What we see consistently is that after an initial ramp-up period, relationships deepen as merchants expand into new countries, adopt products, and add payment methods. One of our hot ride-hailing merchants, who we've worked with since 2016, initially started with one specific use case and later expanded into on-demand delivery. We now serve this client end-to-end across 18 countries and are expanding through recently signed new deals that further reinforces the long-term growth potential of this relationship. An internet service provider, who we've categorized as software as a service merchant, onboarded in 2021, has expanded from 19 countries to 40 in the last 3 years, a testament to the trust these merchants place in Dlocal to power their international expansion. What enables that pace is our licensing portfolio, our local payment method coverage, and our ability to open frontier markets very quickly. In markets such as Kenya, for example, over half of users transacting with this merchant via mobile money are net new customers they would not have reached otherwise. And an e-commerce merchant we onboarded in 2023 started with only 2 countries, but now operates in 21, with Buy Now, Pay Later having gone live in Mexico and South Africa over the past 2 quarters, which are driving higher ticket sizes and over 50% net new users for them. Examples like these are why our revenue retention has exceeded 140% for 4 consecutive quarters. But as we like to say, we're still in the early days. These 3 merchants, for example, all grew TPV north of 70% year on year during the first quarter of 2026. So to wrap up, 10 years and the thesis is intact. The opportunity is larger than ever, and we're better equipped to capture it than ever before. The infrastructure we've built, licenses, payment methods, stakeholder relationships, and data, the technology, it all abstracts local complexity and compounds in value over time. The combination of a strong base business momentum, a product roadmap that is beginning to gain traction, and secular tailwinds across our markets as merchants increasingly convert to local processing gives us confidence that the next decade can be as impressive as the last. With that, let me hand the call over to Guillermo to cover our quarterly financials.
Thank you, Pedro. Good afternoon, everyone. Let me take you through Q1 results. Top-line momentum continued to accelerate, with TPV north of $14 billion for the first time, and gross profit reaching a new record. The bottom line, though, reflects 2 specific dynamics I want to address upfront. The expected and already flagged higher OpEx carrying over from our 2025 investments, and a non-recurring prior year tax adjustment. TPV reached $14.1 billion in Q1, up 73% year-on-year and 7% quarter-on-quarter, our 6th consecutive quarter above 50% growth. And that's a number we're very proud of. And more importantly, this growth isn't concentrated in just one place. It's broad-based and runs across different countries, verticals, merchants, and products. Our top 3 markets, Mexico, Brazil, and Argentina, continue to grow consistently. And we're also seeing a strong contribution from markets like Chile, Nigeria, Colombia, and Vietnam. On verticals, travel led quarter-on-quarter growth at 38%, driven by a new expansion deal with a key global travel merchant. This is a vertical that's still early for us, but it's gaining real traction. On-demand delivery also grew strongly quarter-on-quarter at 24%, fueled by the expansion of deals with both regional and global merchants. On the other hand, E-commerce and remittances delivered soft results sequentially, consistent with the expected seasonality following the fourth quarter peak. Gross profit reached a record $119 million, up 40% year-on-year and up 2% quarter-on-quarter. On a sequential basis, the gross profit performance is explained by two key positive drivers. Argentina recovery, which we saw a strong volume growth and normalized funding cost, and growth in Africa and Asia, with notable contribution from Nigeria, Mozambique, and Vietnam, which is also helping us drive a more diversified geographic mix. Those were partially offset by Brazil's normalization after an exceptionally strong Q4, together with a modest mix shift to lower take rate merchants across other LATAM and other smaller markets. But most of these markets are still growing strongly in volume, and the quarter-on-quarter dynamics are driven by mix and seasonality, not by an underlying softness in demand. Very importantly, this quarter we decided to book a one-off prior period tax adjustment. During an internal review of certain tax items, and after consulting with our advisors, we adjusted our tax treatment for prior periods of one of our installment payment products in certain markets to reflect what we determined to be the most appropriate position under applicable rules. This out-of-period adjustment was not material to any previously reported annual or interim period, and we do not expect to record comparable items in future quarters. The total impact was $9.7 million, of which approximately $5.3 million landed in the corporate tax line and $4.4 million in operating expenses. This related to indirect and other taxes. Given its non-recurrent and prior period nature, we think the normalized numbers tell the real bottom line story better. Operating profit for the quarter was $53 million as reported, but $57 million excluding this one-off out-of-period adjustment, representing a 25% growth year-on-year and a 48% operating profit to gross profit ratio, excluding the one-off. On the cost side, total operating expenses were $62 million, excluding the out-of-period adjustment, up 58% year-on-year and 16% quarter-on-quarter. This reflects the expected carryover of the second half of 2025 OPEX into the first quarter, something we had flagged at our last earnings call. As we close out our investment cycle, a portion of that cost base is annualized into 2026, and the first half of the year is naturally where that pressure is most visible. This reflects the timing of our 2024-2025 investment cycle moving through our P&L. We expect that to moderate as the year progresses. Below the operating line, net income came in at $42 million as reported. Adjusted for the same one-off, we would be at $52 million, which represents about 11% year-on-year growth. It's worth noting that Q1 2025 benefited from approximately $7 billion in non-cash mark-to-market gains in our Argentina bond holdings. That's a low 10% effective tax rate. The reported effective tax rate for the quarter was approximately 26%, elevated by the non-recurring item, but excluding it, the effective tax rate would have been approximately 16%. Adjusted free cash flow was impacted by temporary working capital effects, primarily timing in tax credit netting and higher receivables from our advancements operations. We expect this to gradually reverse over the coming quarters. We continue to see healthy cash generation, with cash flow from operations before working capital changes at $69.3 million, growing by close to 10% year-over-year. So the underlying cash generation is working as it should. So to wrap it up, top-line momentum was strong again this quarter, with new records on both volume and gross profit. Reported operating profit and net income was weighed down by a one-off out-of-period tax adjustment, but the underlying business is in great shape, and we're keeping our full-year guidance unchanged. With that, I'll hand it over to Chris.
Hello, everyone. Before we open the floor to questions, we thought we'd try something a little bit different today. A brief conversation with Pedro and Guillermo here, covering the key themes behind the quarter that we think will be most interesting to investors. Guillermo, let's start with you, and let's start with the results. Gross profit came in quite strong this quarter, even above our own expectations. And this is typically a seasonally softer quarter for the business after the fourth quarter. What drove this performance?
Yes, and I think it's worth unpacking because the headline number, as you said, was very strong in Q1. The standout definitely was Argentina. To give some context, Q4 was a weak quarter for us in Argentina. We saw election-related FX volatility, we saw pressure on funding costs, and that pushed our margins down in the quarter. Now, what we saw in Q1 was a clear recovery from that. So those specific pressures like funding costs came down materially, and volumes have continued to grow very strongly in the market. So you have both a real recovery in the market and then improvement gross profit quarter on quarter. So a very good story in Argentina. And on the other hand, Brazil works on the opposite direction in the quarter. So Q4 was particularly strong in Q4. You had the seasonal peak of like Black Friday and holiday e-commerce installments that helped the quarter quite a lot. And you saw what you usually expect in Q1, which is a sequential decline from that. What matters in Brazil, though, is that if you look at the performance, is very strong year on year. So we almost more than double the gross profit in the quarter year on year. So the other thing that I would highlight as well is Africa and Asia. They represent now approximately 29% of gross profit, and they grew by 16% quarter on quarter, so more than the average of the company. So that is meaningfully outpacing how the company is growing, and it's actually helping us from a diversification of geography as well. So the key message is very simple. All our core markets are growing in volume, and the sequential movements are mostly explained by mix, seasonality, and in the case of Argentina, a clear recovery from a weak Q4. The most important thing is that diversification that I'm talking about in the gross profit base, which is pointing into a more healthy portfolio of countries.
Great. And so staying on the financial results for a second and talking more about bottom line dynamics, specifically on operating expenses. We've previously communicated, we talked about this quite a bit during the fourth quarter, that our expectations for OpEx trajectory this year, and indicated that operating leverage would be much more pronounced in the second half of the year than the first half. Based on what you've seen so far, has anything changed? And how should investors think about operating leverage going forward?
Okay, so I don't think it's changed. So on OpEx, like the first quarter shows what we already flagged in Q4 last year in the earnings call. We are carrying over from the investment cycle costs that happened at the end of 2025. And as we said, they're more visible at the beginning, at the first half of 2026. And the operating profit to gross profit ratio obviously reflect that. OpEx was also impacted by the prior year tax adjustment I mentioned. Specifically, of the $9.7 million, $4.4 million were in OpEx. That's the portion that relates to indirect and other taxes. And obviously that flows through operating expenses and the operating profit to gross profit ratio. So it's important to normalize this when you want to get a clear picture of the underlying expense performance. Excluding that one-off, which I'll discuss a little bit more in a moment, the underlying operating profit to gross profit ratio would have been 48%. So it's still relatively healthy. As we lap the 2025 cost build out, OpEx growth rates should naturally moderate throughout the year. So that's the mechanics that we're waiting to see throughout the year. So that combined with the continued top line momentum, that should drive improving operating leverage in the back half of the year. So that trajectory is what matters to us more than like the results of a single quarter. Now, looking ahead, the ongoing impact from this updated tax treatment that I mentioned, we expect it to be limited. We're actively working with merchants to pass this cost through commercially, and to the extent that we cannot fully do so, we believe the residual impact will be manageable. And we do not foresee at this point any meaningful additional prior period adjustments in relation to this. Again, you need to normalize for the tax adjustment that I mentioned to get a clear picture. So excluding this item, operating profit grew 25% year over year. And net income grew approximately 11% year over year, which I think tells the real story of the underlying performance.
Yeah, so putting this all together and going to you, Pedro, and as a reminder to our investor community, unless there are material changes, we only expect to provide updates to our guidance twice yearly. But just for the avoidance of doubt here, how should investors interpret our results in the connection to our full year guidance?
So guidance remains unchanged, as Guillermo mentioned at the end of his prepared remarks. We continue to see a lot of strength across top line. We expected costs to come in heavy from a margin perspective in H1 and improving towards H2 on a year-on-year basis. And I'd say they came in slightly ahead even of that expectation, but we're already addressing that. So guidance remains unchanged.
Great. I want to talk now about the commercial side, what really fuels our business. You spent time, Pedro, with some of our most important merchants during our large annual event just a few weeks ago. In these conversations with these merchants, what stood out to you? Where are their priorities?
So yeah, it was genuinely a very energizing event. And to me, what was most interesting is how much the conversation has shifted over the past 3-4 years. In the past, merchants would typically come to us with a very specific market or payment method problem. And it was usually something in one of the few very large emerging markets where we operate. Conversations now show that they're thinking about emerging market payments infrastructure as a core part of what they need to solve as part of their overall go-to-market strategy across emerging markets. So the conversations are deeper, and merchants are definitely increasingly more sold on the concept of localizing payments as a key unlock to growth. And so the conversations with us are much more central to them, not in a few markets and a few payment methods, but truly across the global south. So it goes beyond your typical BRICS conversation, and they start asking for solutions for a vast number of frontiers market. Merchants who used to come to us with a very basic local acquiring coverage of just Visa or MasterCard now start to ask about real-time networks like Pix and Breve in Colombia. We're beginning to see a strong pickup in curiosity around credit solutions and buy now, pay later, local wallets, and certainly local card schemes that are also becoming increasingly important in different markets. And so all of this raises the bar for what they expect from us. It also raises the share of wallet that we can capture from these merchants globally. I think one illustrative conversation was one of our very, very large clients basically told us, look, you've now reached a scale with us where you are among our largest payment partners. And this is exactly where we want to be sitting with these merchants, with significant growth in share of wallet, but also our relationship with them becoming very relevant for them on a global basis. That's how you really are able to sustain the kind of compounding of growth that we aim to sustain.
Great. And switching topics slightly, there's one more question I want to ask you, Pedro. The ASA transaction, which we spoke about last year, closed during this last quarter. How should investors think about what this opens for strategically and what it means for Dlocal's presence in Africa more broadly?
Yeah. So I think we need to frame this correctly. The most useful thing is to be very precise about what the ASA transaction is and also what it's not. So to be very upfront, the transaction is not material or meaningful in the results that we've just announced. And that has a lot to do with a number of legal and regulatory hurdles that we faced prior to being able to close. I'm glad we've crossed that finish line, but in that time period, the deal structure mutated a lot. It ended up being an asset purchase. And also because it took so long, ASA's top line was definitely negatively affected by the time that took. It is strategically important to deepen the capabilities and the positioning that we have in Africa. So it brought us customer relationships, it brought us intellectual properties and some licenses and key talent that will help us continue to expand our leadership across African markets. And it would definitely have taken us a lot longer to build all of that without having gotten this acquisition across the finishing line. And I think most importantly, Africa is a region that we've been investing into consistently, and where the long-term opportunity in terms of digital payment adoption, cross-border commerce growth, and the expansion of financial inclusion remains among the most compelling when we look at the globe. And so the transaction, above all else, reinforces our commitment to the region and positions us even better to capture the opportunity as it develops. We're not signaling any near-term revenue impact from this. I'd say by and large, it shouldn't have any sort of distortion in future quarters that would force you to want to look at the business on a same store sale type metric or anything. So happy to have concluded it, happy to have the ASA team and assets on board, and we continue to build a phenomenal business across the continent.
Great. One final question for you, Guillermo, as we wrap up here. You've now been at Dlocal for about 6 months. Would love to hear your early assessment of the company, where we stand today, where you're focused, and what surprised you.
Yeah, that's right, 6 months in. And I have to say my conviction in the opportunity that first made me join Dlocal has all increased. I think at the beginning I was talking about we're just scratching the surface, and definitely that's what I'm seeing 6 months in. The business is really exceptional at what it does. So if you look at the depth of the local infrastructure that we have, the quality of the relationships that we have with merchants, and then how consistently we execute in markets that are difficult to operate, I think that's something that has really impressed me. And that combination, I think, is rare and it's difficult to replicate. Second, on where I see my work ahead, I am focused on 3 key things. The first one is to continue improving how we translate the top line growth that we, for example, see in this quarter into operating profit, especially as we exit the investment cycle that Dlocal has been in the past 2 years. The mechanics are favorable, but that leverage doesn't just happen by itself. I think my role is to make sure that we have the discipline as a company to capture it. And also something very close to home is to make sure that our financial model translate the strong cash generation that the business produces into higher return for our shareholders. And we've already taken meaningful steps already to execute on these. Like, for example, the $300 million payback, the authorization that we got and we mentioned in the last quarter of last year. And finally, also making sure that the finance organization continues to build and evolve the processes and the systems in a way that are appropriate for a business that now processes north of $14 billion of volume every quarter, and that is growing by more than 70% year on year. So the last thing I would mention is having come from businesses that were at different stages of maturity, the opportunity ahead for Dlocal is genuinely immense. I think even I appreciate this opportunity has really surprised me. The markets we operate are still in early stages in the digital payment adoption, and our merchant base continues to expand, growth, deepen. The product roadmap that Pedro mentioned, I think he talked about BNPL and stable coins. I mean, these are real growth opportunities and levers that are just beginning to contribute. So what can I say? Strong business, clear work ahead in my hands, and a large opportunity ahead for the company. So all exciting work.
Great. Pedro, Guillermo, thank you both. We hope this has been a useful conversation to our investors. This concludes it, and we can now open the line to your questions.
Ladies and gentlemen, to ask a question at this time, you will need to press star 11 on your telephone keypad and wait for your name to be announced. Please stand by while we compile the Q&A roster. Our first question coming from the line of Tito Labarta with Goldman Sachs. Your line is now open.
Hi, good evening, Pedro, Guillermo, Chris. Thank you for the call. and taking my questions. Just wanted to follow up, I guess, particularly on the expenses a little bit. And, Pedro, you mentioned that it did come a little bit higher than expected. Looking at the guidance, you're above on gross profit, but a little bit below on the OpEx. And so what drove that to be a little bit higher than expected? You mentioned some corrective measures. What are those measures? Just to think about how that can evolve from here, if you can bring that closer to the higher end of guidance by year end, or should that continue to be maybe a little bit below the trends of gross profit? Thank you.
Yeah, happy to start taking that one. I think it's important to say that the Q1 has the full annualized impact of the investment cycle ramp up that we started to see in late 25, and we already flagged in Q4. The important thing to know is this is the largest single driver of the year-over-year growth in OpEx. Okay, and it should moderate as we move through 2026. Now, you're right that in our remarks I said that OpEx did come in slightly above what we were expecting in the quarter. And to be honest, there wasn't a single factor. It was a handful of smaller items from some discretionary categories and third-party spend to slightly higher average salaries. And we have already initiated some targeted corrective actions. For example, we don't expect any new net hiring throughout the rest of the year. So when you think about the remainder of 26, I think there's 4 things that you should combine to have a more favorable OpEx growth trajectory. The first one is what I mentioned at the beginning, the natural fading of the late 25 investment cycle annualization. The second one is we're planning to accelerate all of our automation agenda. We also have the corrective actions that I just mentioned, and then we're also mechanically expecting lower share-based payments expenses as the graded vesting attribution method flows through the remainder of the year. So I think together these 4 should contribute to improving operating leverage as we move through the year, in particular in the second half of the year.
Yeah, I just complement that by reminding everyone that, first of all, as Guillermo just said, the OpEx will come under control moving forward. We had signaled last quarter that the first half of the year would be a bit weak on margin, and then that sequentially improves. But more importantly, let's not forget that the investments we had been making over the prior 2 years, and as Guillermo said, are rolling over into the first half of this year with a less expense-heavy comp in H1 of 25, are exactly what is allowing us to deliver the kind of TPV, revenue, and gross profit acceleration and consistency that we've been delivering. And that's what sets us up long-term to be scale leaders, to have the widest number of commercial relationships with global merchants, which if we take a longer-term view, is exactly how we believe we should be managing this business. So now that the investment cycle is behind us, we start entering a phase over the next few quarters where the innate operating leverage of the business model should begin to flow through the P&L.
All right. No, that's very helpful. Thanks, Pedro, Guillermo, for clarifying. And one clarification, just there was the one-off, which I think did impact operating expenses. Are you considering that in the guidance, or you're not considering that? I mean, we should adjust for that, right? Or just to make sure.
Look, Tito, we've moved away from adjusted metrics and have given a guidance on operating income because at the end of the day, philosophically, that's what we manage for. So let's see how top line comes in. I think we're off to a good start through April. But in general, our guidance comments, they don't try to adjust anything else out. It makes it more difficult to give guidance, but we think it reflects the philosophy of how we're managing this, which is to true operating income and to true EPS.
Okay, that makes sense. Thanks for clarifying and opening. But very good, strong results on the TPV and gross profit. So good to see that doing very well. Thank you.
Thank you. Our next question coming from the line of Pedro with Itaú BBA. Your line is now open.
Thank you so much. Good evening. First on that, we saw it on the working capital, you guys mentioning a period of more prepayment services, for clients. So first, around that topic, how do you see the revenues for that? Does it come part of the fee revenues, or does it generate financial income? Second, how are you seeing that business building up potentially? It's in more than one region. That's one question. And then the second would be on the gross profit part. When I look at the delta revenues, delta gross profit for Brazil, and you guys mentioned Argentina, but Brazil, it looks like the incremental revenue is coming a lot of profitability. If you can just double click on that a little bit. Thank you.
Okay, so I think I understood your first question. We do drive revenues from very, very short duration merchant advances, typically for liquidity needs a merchant may have in a market. And we do advance installments for our merchants in markets where installment advances are common, such as Brazil and Argentina. We don't break out the revenue derived from that business yet. I think at some point when it becomes sufficiently material, we will. It's important, but it's not anything massive. More importantly, on the working capital, just one clarification here. It's not that these businesses are inherently working capital consumptive. It's the architecture we have to fund these businesses in Argentina short term is something that has hit working capital. That gets reversed, and this is important, ideally over the next few quarters. And not only does it mean that going forward, that business is no longer working capital negative, but that the last few quarters, Q3 and Q1 of this year, that had this negative impact on working capital, all of those funds get released from the SPV that we're using to fund this. And so there's a big one-off free cash flow gain from the stuff that had been sent into the SPV and negatively affects working capital. So this is a temporary hit to the free cash flow that ideally over the next 3 quarters gets reversed.
Yeah, if I may add to that on free cash flow, I think if you look at the underlying cash generation, it remains strong and in line with our expectations. So I think this quarter, this type of quarter volatility we've already seen in the past. So to be honest, we don't see this quarter as a structural change to our cash generation capacity at all.
Thank you.
Great. And on Brazil, a couple of things. First of all, I think Brazil year on year, extremely strong gross profit, more than doubled. The comps get more difficult going forward, but Brazil has really been one of the strongest performers when we take a multi-quarter view. It is down sequentially, driven primarily by seasonality. E-commerce in Brazil is very relevant. And within the e-commerce segment, these installments we're talking about typically are more prevalent by consumers during the holiday shopping season. So there have been less installment revenues in Q1 and slowdown in the e-commerce merchants. And the other thing driving the sequential decrease in Brazil is we have seen an increase in Pix mix once we move out of Q4. And Pix does have lower monetization than cards, which typically are more prevalent in Q4. So I would say Brazil sequentially is seasonal. Brazil performing very well. Comps get harder, but I think the underlying strength of the business is still there.
Yeah, thank you. Even with the seasonality, it looks like it was maybe stronger even than it could have been. No? But yeah, appreciate it. Thank you.
Thank you. Our next question in the queue coming from the line of Camila Azevedo with UBS. Your line is now open.
Hi, Pedro, Guillermo, Christopher. Thank you so much for the space. I have just one from my side. Africa and Asia showed broad-based growth, but experts suggest Asia is significantly more challenging due to a more developed local financial landscape. So you also mentioned that merchants are increasing its interest in more regions. So how is the local strategy in blue ocean markets like Nigeria and Egypt different from its approach in highly competitive markets like Vietnam or Indonesia? Thank you.
Yeah, great question. Thank you. So the strength in the Africa and Asia segment is still driven by Africa, including the Middle East. Asia for us is still initial steps. I think what has changed in our view of Asia is that the more work we've done around Asia, our thinking has really evolved from thinking that we were late to Asia and that it was a market that was entirely well served, to increasingly understanding from our merchants and leveraging the merchant relationships we already have with most of the most relevant global merchants, that the high level of fragmentation across Asia, the prevalence of alternative payment methods, and the relatively still improvable performance they have on cards means two things about Asia. That we think that our strategy and the key success factors that have led us to be very successful in Africa and Latin America actually are applicable to Asia as we cross-sell our growing Asian capabilities to our global merchants. And the second, I think, myth we've dispelled is that Asia necessarily was a lower take rate market for the enterprise segment. From what we're seeing in our current Asian operations as it scales out, that doesn't seem to be the case either. So I think you will see us increasingly build out capabilities in Asia, and ideally Asia over a multi-year period becomes quite relevant to our overall P&L. And that really could be trajectory changing, just because when you look at the size of the total market, Asia still dwarfs LATAM and Africa. So encouraging initial steps. We're seeing markets like Vietnam, Philippines performing well for us, and it's giving us increasing confidence to continue to build out in Asia. That doesn't mean significant investments. It just means executing the playbook that has been so successful across the rest of emerging markets, across Southeast Asia as well.
That's super clear. Thank you.
Thank you. Now, next question coming from the line of Matt Clegg with Truist. The line is now open.
Hey, good evening, guys. Thanks for taking the question here. Wanted to ask about some of the new verticals that you're seeing success in, travel and gaming. Just curious if you guys could kind of like double click on, what's driving that new success there. Is it kind of like go-to-market investments? Is it product related? Any additional detail would be really helpful.
Yeah, thanks, Matt. So I think, and we tried to highlight this in the opening remarks, we've actually gotten fairly good at being able to leverage the core payment capabilities, which are universal across most verticals, with the right amount of verticalization, both from a product perspective, but also from an account management and understanding the specifics of payments in multiple verticals. So Dlocal is not a specialist in any one payment vertical, but has strength across multiple verticals, which sets us up very well for sustained growth. And we keep adding more and more verticals. I'd say right now, travel and gaming are slightly different situations. Travel has been growing, driven by one or two very large wins that took a long time. The pipeline is typically slow, but that have landed and are beginning to ramp up with very, very large global leaders and it has a very solid pipeline within the travel space, both OTAs, direct travel airlines, payment facilitators that work with the industry. Gaming is slightly earlier on in its development. Gaming is one where the merchant of record product that we have is quite relevant, where you take on not just the payment, but some incremental parts of the digital distribution, which makes it a higher take rate category, which is why it's attractive for us. But I'd say from pipeline and actual commercial deals that are ramping up, gaming is slightly behind travel. Over time, this should be a natural part of our strategy, which is to add more verticals, that we verticalize the user experience, the merchant experience, and the sales efforts, and we're able to move into a growing number of categories.
Super helpful, Pedro. And then just quick follow-up, kind of on the same topic of expanding your TAM here. You guys kind of talked a little bit last quarter about moving into the card present world. Was just hoping that you could provide an update on, your integrations there, any investments that you're making there, and kind of like early success that you're seeing in the card present world. Thank you.
Yeah, the card present product is one that is being developed as a solution for a very large client, a global client. Ideally, we'll be able to announce it when it goes live. So that contract allows us to fund the build, but more importantly, that'll be the maiden launch of our card present efforts by powering their card present payment operations initially in a few Latin American countries, and then if successful, expanding. So that's not live yet, and therefore that product hasn't gone live yet. It will once that initial large deal goes to market, which is scheduled for some time in the second half of this year. Hopefully we can meet deadlines. The physical world is more difficult. It's slightly more complex. It involves physical hardware logistics. So it's a project that is one that we need to make sure we delve into step by step alongside our merchant client.
Awesome. Thank you, Pedro.
Thank you. Our next question coming from the line of Jamie Friedman with Susquehanna. Your line is now open.
Hi, thank you for all of the perspective and details on the results. Pedro, I was hoping you could just remind us at a high level what the investments were that you made over the last, I'm going to say, year, and how you're seeing those return, because your confidence in the increased profitability in the company in the second half is noteworthy. So that's my first one. And then at a very high level, if you could share from your merchant perspectives, which conversations are more urgent? Are they related to stablecoin or agentification, or neither, or both? But which of those do the merchants ask you about most? Thank you.
Let me take those back to front, Jamie, because the first one is straightforward. I would say neither. Really, the biggest interest is alternative payment methods, real-time networks that are very, very rapidly expanding throughout the emerging world, digital wallets that were invented in the emerging world and have become very relevant in many markets, local card schemes, as I mentioned. So most of the financial infrastructure across the global south, before we even get to stable or agentic, is very different to the developed world. And that's what we solve for, an abstract complexity away from global merchants that aren't accustomed and don't really want to deal with all of that. So I'd say stable and agentic are things that we're working on, but it's not really where the short-term volumes and business are. Those are things we need to be prepared for. Stable coins first, which is actually, I'd say, a reality already. We launched our stable full solution about 2 or 3 weeks ago. So we have significant capabilities, and we're already beginning to see a rapid increase in settling to and settlement from merchants in stable coins. Agentic, I think the focus is simply to make sure that all these global APMs that we serve somehow are included in the agentic protocols that are emerging. And so we're trying to work closely with most of the more relevant ones. But those two things are way smaller than just the core digital wallets, real-time networks, local card schemes, and localization of credit cards, which is still the bread and butter of our volume. In terms of the investments, again, just to reiterate, and thanks for asking the question, we have a business that's growing TPV this quarter at 70% and actually has been accelerating off of an increasingly larger base. Now, there's a lot of operational leverage in our business, and we hope and strive to show that over the next few quarters. But it still does require, when you're adding markets, you're adding payment methods, and you're growing your volume at that rate, to make sure that you've invested in the people, in the systems, to be able to manage that growth over the long run. And then we also have a growing product development pipeline. We've talked about new verticals, new products. And so a big part of the increase in spend in the 24-25 cycle was in engineering headcount and product headcount. As we settle along towards the end of 25, we've staffed and we've invested in most of the things we saw as necessary to do some catch up on. And what we're seeing now, as Guillermo pointed out, is kind of the flow over from those investments into the first half of this year. But the pace of incremental headcount and the pace of incremental investment in systems will significantly decelerate so that the operational leverage can begin to kick in.
Makes sense. Thanks, Pedro. I'll drop back in the queue.
Thank you. And there are no further questions in the queue at this time. Ladies and gentlemen, this concludes today's program. Thank you all for participating, and you may now disconnect.
He legitimately said, I'll drop back into queue. And then they said, no, we're going to end it. Actually, why don't you drop into queue into Nubank's call instead there, buddy? Overall, I already know the answer to this. Does this change your opinion on any of these companies that's happened today so far?
No, it does not. It does not. What is the stock doing? That's probably still down 3, 4, 5% or so.
Yeah, 4.5.
Okay. And I don't know, based on the chat, I assume NU is down more.
7.9. It's coming back. I bought in the after hours. So we'll see. Dude, I took an initial look at Nubank, and I don't know about you. Do you want to listen to the call? I'm a little bit drained now.
Yeah, no, maybe skip the call. Maybe just have a quick look at the presentation.
Yeah,
would be
I think
better.
that's fair. This company looks stronger than ever, honestly. Here, one sec. My camera's in the way, so I need to whatever. I'll just do this. So customers are now at 135 million. Average revenue per customer has now hit a new high, $16. The efficiency ratio is now at a new low, 18%, which is, I think, literally might be the lowest in the world in the finance industry. Net income, I don't think it was a new high. I think last quarter was slightly higher, but yeah, margins got hit and growth accelerated. That's the story. It's the same story that happened in Mercado Libre that brought the stock down. They have a massive opportunity, is what they're highlighting here, and that's true for Mexico and Brazil. They own less than 1% of the gross profit market share in Mexico and about 7% in Brazil. Overall, things are getting better in Mexico as well. 15 million customers in Mexico. Average revenue per customer in Mexico, $12.40, which is way higher than I thought they'd be at this far in. Because they don't really have
look at
season.
the efficiency ratio, how high it still is right now. And so based on what we know from the other markets, I mean, it's 42%, but it's down from 92 and 120. But if we are making our way down to 18%, there's still a long, long way to go.
Yeah. And so they continuously make these small improvements over time. Deposits increased. The cost of deposits has been lower, but it's also been much higher. Me and you have held through this company whenever this was in, high 90 percentages. Now being at 88%, it's allowing them to grow, but also increase margin. But I'm just seeing more of the exact same thing every single time. Non-performing loans ticking up is, and they highlight here, seasonality. You can see the Q1s tick up every time. So we follow the same trend. We know this, okay? 90 plus day non-performing loans actually going down 6.5%. Everything I'm seeing is continuing what they've done many quarters before. And actually, as I'm talking, Nubank, they must be starting their call right now because the stock is starting to recover back to 12.25 now, only down -5. Who knows if we'll keep it tomorrow? But yeah,
I think if it opens up down 5-6%, it's definitely oversold on the daily. Not that it changes my mind about anything, but yeah. Oversold great companies usually is not a bad thing to pick up.
Exactly. They've got a huge share ahead of them, but the numbers actually didn't look bad. Like, think about the monthly average revenue per customer being around $16, and Mexico is at $12.40 or something like this. But as they get seasoned customers, I don't know if you can see this, but the older cohorts, the longer you stay on Nubank's platform, the more you make for them. And that's not compounding, that's per month, because you have more products with them, you've got more deposits, you make a lot more money for them. Cost to serve did tick up to $1, but they've made statements in the past talking about how they would try to keep this from going over $1. Who knows if that's what they still are saying, or if maybe rising AI costs or something like this is going to change the trajectory. Who knows? I've not seen that. But I'll need to take a deeper look at all these numbers. Luckily, they actually have
listen to the call or just read the transcript, because I mean, if you don't have a good microphone, you shouldn't be allowed to speak in a call. Like, there was this one analyst in the local call, like he had his hand, I think, covering his mouth when he was speaking. What the heck are you doing?
Yeah.
Like, Pedro, I think I understood your first question. Like, yeah, at least someone did.
Rate cuts have a 0% chance fintech sector goes down. Guess what? Nubank is not in the same country. They're in Brazil, Mexico, and Colombia, so they have their own.
And the rates are quite high there, anyways.
Yeah, they have their own rates to deal with that are much, much higher.
It could come down. Plus, they do have the benefit of a very weak dollar, so when they report, it's looking a bit better.
Mm-hmm.
Although not with every currency, but
and revenue accelerated. This is some of the highest growth rates we've seen from Nubank in a while. So where was it? 57%. This bottomed, and now, like Neil just said, a lot of this has to do with currency exchange. So whenever they actually went down to 13.3%, Nubank's never put up a growth rate that low, but they were growing, but the dollar was not going in their favor. So I think that quarter they grew something like 39%, but because of the currency exchange, they always report in GAAP US dollars. So it was 13.3%. And that could be a tailwind to their growth as well. So I need to look at all this in terms of what they actually did from their currency versus, you want to see those adjustments. But they just put up a 57% year-over-year growth rate. Not too bad.
By the way, the weak dollar is also very good for an Amazon or a Meta or whatever, because they're also making quite a lot of money in euros, for example, and euro is much stronger, so it helps the reporting, which was a headwind, I think, a year and a half ago. Amazon, especially, they said, "Oh, strong dollar is a headwind," and then suddenly, weak dollar, tailwind.
Is there anything else that you want to add before we go?
No, good company, good companies, good report. I like what I saw. Stock is down, which means I'll probably add more tomorrow. Probably more NU than Dlocal, because NU is still a small holding for me right now. But yeah, again, I understand people that don't want to buy these companies at the moment because they have zero momentum. I get it, fine. But there will come a time where people will freak out and say, maybe the AI semiconductor cycle has stopped and whatever, and I'll be quite comfortable knowing that I've got things that have not participated in a huge upcycle and still have good companies in the portfolio. But I get it. Fintech, financials, software, they all suck at the moment, stock-wise. But the business clearly is doing very well, and so that's all that matters to me. But of course, it's opportunity cost, as they say, at the moment. But if you have patience, if you don't mind waiting, I guess great companies at cheap prices is not a bad deal. So I'll take it.
It's not I've never heard of this strategy of investing where you buy companies based on them being cheap and growing still and getting cheaper. But if you want to try it, Neil, you go right ahead.
Yeah. I'll be called a clown, but I'll try it.
No one's ever tried it before. The companies are growing, and tomorrow they'll open up much cheaper than where they were before. Nubank's trailing PE is 22 times before this most recent update on their growth in net income, while growing at 57%. I mean, I don't know. Maybe I'm wrong, but
maybe not.
Maybe not. And the interesting thing about Nubank is that whenever it does run, it's one of those names where they're like, oh my God, it just went from 11 to 18, like a snap of a finger. It comes back so fast. So who knows? It might be down for months and months, years. I don't know. But as long as the company keeps executing and they keep expanding their markets and finding new customers, that's what we're looking for.
Yeah, with NU, it's the same with Meli, but in reverse, psychological aspect of it's cheap because it's only $11 per share, and Meli is expensive because it's $1,600 per share, but it doesn't mean anything about the company, whether it's cheap or expensive. It's just the shares are easier to buy. Of course, options as well, but I mean, both of them, I think, are NU is now 60 billion, and then Meli is maybe 80 billion or something like that, so pretty close one with each other.
Yeah, Meli's been a little bit bigger the whole time, but hey, they've got a whole Amazon on the side past the fintech. I guess they get a little valuation premium there and, bigger numbers. But anyway, ladies and gentlemen, thank you all so much for watching. If you guys aren't subscribed to the channels, check us out. Future Investing. That's Neil Couch Investor. I'm sure you guys know him, though. He's got way more subscribers than me. But thank you all so much for watching. Really do appreciate your time. Bye for now.